Bitcoin Uncensored bash him all the time. Saying
They bash
Adam B the V.
Oh, they do?
Yeah, they know him, mate. They kind of used to be friends. But they just
That's
say
kind of their MO though, right? They just kind of like
no, they bash people if they think they're doing stupid things, and they don't bash everybody.
It's equal opportunity bashing.
Yeah. But if they've got a big name, it doesn't stop them from bashing them.
Yeah. All right. Well, we're gonna give this another try here, guys. Sorry for the delay, and I'm not sure how good the audio is gonna be. We've had to switch microphones here. It's too bad too, because we were having a good old conversation there before we realized nobody could hear what we were talking about. It's all right, man. Bali time. It's we're here in paradise. All we have to do is make sure a coconut doesn't fall and hit us on the head, and we have no reason to not be happy. So technical difficulties notwithstanding, I'm pretty happy to be here. Welcome back to Bali, Willy.
Thanks, Gary.
Yeah. It's good to have you here. We're getting the band back together. So today we're going to have a little conversation with Willy Woo. He was here in Bali with us back in 2014 when we were just getting going here. You know, we've been trying to get a Bitcoin economy to happen here in Bali. You were here at the beginning, and now you're here a couple years later. Hopefully you will notice some progress that we've made during that time. But we don't have to spend much time on that. I'm more interested in catching up with you. You've just come here from Sri Lanka?
Yeah.
Like a 3-day journey?
Yeah, it was sort of overnight in KL and then over here.
Yeah, and you're a little bit jet lagged, a little bit road weary.
Yeah, a little bit.
Yeah.
Yeah,
that's
weird
okay.
hours.
We tried to do this little talk from your Sri Lankan internet, and we totally struck out.
Yeah, we were sharing a 100 kilobit connection between 8 rooms because I think the pulsar ran out.
Yes, such is life here in Southeast Asia. Trying to get things done sometimes is a challenge, but anyway, it's good that you're here. I'm glad that we finally got our microphone working here, and all that really matters is the content of what we're going to talk about. And I know that you have been pretty prolific lately, publishing lots of things and getting a little bit of attention on the Twitter sphere, on the interwebs. People are kind of paying attention to some of the things you've been writing lately, and I really wanted to get into some of the details of what you've been writing lately. You started, I think, back in October. You've only been publishing things for a few months here.
Yeah, really, just since
Yeah, you mentioned when we were talking before that you've never had a little bit of free time on your hands to kind of ruminate and think about your thoughts and record your thoughts. You've got a little bit of time to do that now, huh?
Yeah. I kind of dedicated this year for creative endeavors, and since I've been traveling the last 2.5 months, I've been doing Bitcoin analysis full time. So it's been really fun. Fun.
Good times. Bitcoin analysis in some strange hotel room in Sri Lanka.
Yeah.
What else is there to do? Right?
Yeah.
Well, there's a few different things that I think you've addressed. A few different themes I think that have come through that have been interesting for me. I've actually got some of your stuff pulled up here.
Yes, my brain farts.
Your brain farts. Yes, we're all the beneficiaries of your
flatulence.
Yes. This is the first one you published. So I think one of the major themes that you've been hitting on is altcoins, right?
Yeah, it looks like that. I mean, really, I just really wanted to optimize my investment portfolio. And it was, you've got Bitcoin and you've got 700 altcoins to pick from. So which one should we pick? So, I set about a number, or the first month was really about getting all the data. That took most of the work.
Gathering the data,
cleaning it, scrubbing it, getting it all ready. So now I'm sort of in the fast lane of pulling it out and making sense of it. So the first graph there was really just, I can draw a graph of multiple coins. Let's draw it.
It's got different colors.
Yeah. So I drew that, and that was the first hit, you know. But really, that was just a trial run. It looked pretty, you know. I really wanted to get to like indexing. Really, you know, the article that really caught attention was taking a basket of altcoins and then seeing how they perform, which, you know, works really well in Wall Street. What is it? It's like 99 point something % of passive index funds outperform an actively managed fund. And I don't know, someone probably knows, 70% of funds now. So I thought, well, we'll try that with altcoins. And yeah.
So this was your first effort, but then the one that kind of got people's attention was this cryptocurrency index funds.
Yeah, that's the one.
Well, before we go there, let's go back to this shitcoin pattern. This was an earlier effort. I think, you know, if we can like go on that ride along with you with your thought process, it seems like maybe you were already starting to think that these altcoins were, or at least many of them were, following this shitcoin pattern.
Yeah.
This is the first one that got my attention because, yeah, you see, it almost looks like the hype curve. You know, you got the initial enthusiasm and then the, you know,
the Gartner
and then
cycle.
The hype cycle thing. It almost seems like if you've got the valley of despair and then the actual realization of the original potential, or it just goes to shit.
Well, you know, it's like, I think it describes a scam, actually. It's like, you have this pump, it's a Ponzi.
This is the pump area right here.
People put the money in, and then there's a slow decline. As
there's a dead cat bounce right here.
At the top of the pyramid, exit. Yeah, and you get the odd dead cat bounces and stuff. And there was someone commented on Reddit or something about how all altcoins, every one of them, follow this pattern, and that was before Ethereum. So, and I looked at every pattern, and it was the same. It was like an all-time high early on, and then it just never really went anywhere except Bitcoin. So
this isn't any kind of a particular coin. This is just the pattern.
Yeah, that's the pattern. That is actually a particular coin. That is Ripple.
and this is what happens. I mean, I think were you at some point looking for coins to hold, or
yeah,
because there was an investment strategy. I don't know if I talked about it with you or you mentioned it in one of your talks, where you identify something that maybe Bitcoin isn't doing well, or, you know, identify a coin or a thing that new coins do that Bitcoin really struggles with, and then get into that coin. Like, for example, fungibility and anonymity coins, right? That's one. Like, if you think that Bitcoin will never be totally fungible or totally anonymous, then there might be another coin that addresses that niche.
Yeah, and you got to be careful about this because you know, it's surprising what Bitcoin will cover, like the fungibility. Like,
well, that was one of the things that I thought was, you know, I've talked a long time about the, you know, maybe Bitcoin won't go anywhere because there's going to be blacklists, and you know, they're totally traceable, and that's really a poor quality of money itself. I mean, money has to be fungible, or at least cash does. And so,
well, you have the mixes, you know. I mean, it's not safe because it's a third party, but it does provide that privacy. And you know, when you look at fungibility and privacy, well, I mean, if this is the use case. The use case is commerce. I'm going to pay for it. You want network effects. You want low volatility, because you don't want to buy, say Monero, and then have it crash in 12 hours that you're holding it before you've bought your stuff. So you need some level of stability, and you need liquidity. You need enough people trading it. So those two effects are way more important than absolute quality of, you know,
a good
ring
idea.
signature cryptography. If
you
can't, if you've lost half your value in 24 hours, you know. So these are the things that are really hard to produce.
Yes, this is the advantage that Bitcoin has over other coins is the network effects and the liquidity.
Yes, exactly. So like I liken this to like saying the guy next door is going to build a better Facebook. And sure, they might build a better Facebook, but they'll have nobody on it. And so what use is it?
Yes.
You know? So yeah,
Right.
that's the thing
with network dependent functionality, right?
Yeah. So you got to look at that real carefully. You know?
Yeah. Yeah. The functionality is or the feature of the coin is the adoption and liquidity. These things that it's not just about the technology. It's about how many people are using the technology, which creates the utility.
Exactly.
And so we were talking before though about this pattern, and you think that these other coins, like for example Zcash just came out, and you think coins like that are scam coins or unwittingly scamish, or
yeah,
or
I don't know if it's whether they know it or not, but I'm pretty 99% sure it's going to go the way of a shitcoin pattern.
Yeah, it's going to
99.999% sure.
And so where are we? We're like right here with Zcoin.
Yeah, I think we're at the peak.
Yeah,
definitely. I mean, definitely. What 1,000 bitcoins per
right?
Zec? It's peaked. Yeah. Yeah.
And so if your theory is correct, then the people that are in it, the early adopters can sell at a profit and get out before we hit this little trough and at cat bounce and trailing off into obscurity.
Yeah, I mean, I think just about everyone in it right now is in it for the short term. But either traders or miners, and they're just
surely there must be some people that they care about the anonymity, the fungibility, the zero knowledge proof that will allow them to be anonymous.
Well, I guess if you're ignorant of the technology behind it and how it's all working, yeah, you might want to hold it, but no, you might not want to hold it, but you will hold it because you don't know what's behind it. But it's, Zcash is a fork of Bitcoin, right?
Yes.
It's a fork of Bitcoin with their ZK snacks on it.
Yes.
And what we know is, it was discussed in Scaling Bitcoin conference in, what was it, is it Milan or someplace, the last one they had. There were all number of fungibility protocols going on to Bitcoin this coming year. As soon as Segregated Witness goes out, we're going to have ZK snacks on a platform that has liquidity and low volatility. So where does that leave Zcash,
Yeah, it's kind of like when the two political parties in the United States, if there's a third party and they have a good idea, then it just gets sucked up into the platform of one of the larger parties that has the network effects.
Yes, exactly.
And so any challenger will be robbed of their functionality.
Yeah, so don't ever invest in a feature. It's the same with a startup. You don't want to invest in a startup that has a feature. You want a platform.
Ah, okay. So would you call Bitcoin a platform?
Yeah.
Okay, and so these things like fungibility and anonymity, and also some of the scalability is being moved into another layer above Bitcoin. It's looking like they're going to be able to address some of Bitcoin's shortcomings, feature shortcomings, with address them on another layer. And when that happens, if you've invested in a feature like a payment feature or an anonymity feature in another coin, well, it's a bad choice in your opinion.
Yeah, I think so.
So is Bitcoin going to be the coin to rule them all? Is this like, is it going to be that difficult to achieve the network effects that are going to make a challenger viable? Are we stuck with Bitcoin and its proof of work algorithm and it's all its warts and all? Do we just get Bitcoin? Is that?
It's got what? How many years head start? It's there's got to be some use case that won't work on Bitcoin. I can't think of any, but
well, Ethereum would say it's the lack of flexibility, like lack of a Turing-complete computing language is the Achilles heel, right? And that's why someone would move to Ethereum and get off of Bitcoin.
But is that even true? I mean,
also they want to be a platform. It's not just about a feature or two.
I mean, you've got Ethereum there, and they're saying yes, it's Turing-complete. first there's a discussion of, do you want Turing-complete?
Yeah.
And if you did, then you've got things like Counterparty, right? And they were going to throw the Ethereum virtual machine onto their platform, right? So that's essentially the Turing-complete EVM on top of the Bitcoin blockchain. So presumably you can develop just as fast on that, because it's the same essential language. But yeah, I don't know. I'm not sold on Turing-complete. It's like, I kind of liken it to your PC, which is Turing-complete. So if you're running Windows every month or every couple of weeks, you've got a Windows security update.
And that's what broke my microphone, a little security update.
Yeah, probably, right? So yeah, and like with Ethereum, what we're seeing now is very, very, very regular hard forks to patch another vulnerability.
So you think this Turing-complete provides such a complex environment that it's impossible to avoid this constant updating and patching and changing?
Yeah. The attack surface on a Turing-complete computer is essentially infinite. Well, I should say I'm not an expert. I'm just a pundit here.
But it does appear that they've had their bumps in the road. Obviously, Ethereum's a lot younger than Bitcoin is, and maybe they'll get there someday. And there are really compelling use cases, or the pie in the sky development things that they have in mind are pretty exciting and compelling. But yeah, they're definitely bumping their head and banging their knee on the way up, up the ladder.
This is an interesting thing. Is like going back to why Ethereum's so awesome is that you can develop very quickly for it. And I thought, well, if you can develop quickly for it, you'll gain adoption, and adoption beats technical perfection. You don't need a perfect technology; you just need adoption. But
you need network effects. Again, it's the network effects.
Yeah, if like, we're all using Microsoft stuff because they won that race initially, and but like, when you start to think about a hard fork every few weeks or months, and all those projects that are built on top of the Ethereum chain needing to update and fix and patch, you start to lose that speed. And even Ethereum itself, the core devs must be losing a lot of time backpedaling, fixing vulnerabilities. So how quickly can you move forward? So, I mean, if you've got something like, say, Bitcoin, which is going very slowly in its rollout, but if you're not backpedaling, hard forking, fixing vulnerabilities every few weeks, you don't have that same sort of technical debt. If that's a way of putting it.
So it remains to be seen if Ethereum will follow this shitcoin pattern. Thought just hit me looking at this graph. If you were to go back and take a snapshot of Bitcoin back in 2011, it has a graph that looks very much like this.
Yes.
In fact, my first exposure to Bitcoin was an article, the rise and fall of Bitcoin, Wired magazine, like November 2011. And, it had been adopted by Silk Road. It had gone up to like $26. It had only been pennies. I mean, no one really even knew what it was worth back then. It went up to like $26, and then it came back down to like $2, and Wired magazine declared Bitcoin dead. It's probably the first Bitcoin obituary. It wasn't until, if you're looking at this shitcoin pattern, it wasn't until over here when, it took its next little heartbeat.
That's right.
Right. Like, let me show you. Maybe I can pull it up here quickly. If you go to xe.com, you can see the entire history of the Bitcoin price. This could be useful.
Is this the Zodiac? Yeah, they're not seeing this.
No, they're just seeing our screen. Hopefully, they're.
Oh, they're seeing the screen.
So let's look at Bitcoin here. Check this out. So Bitcoin against the U.S. dollar. And you get, where's the chart?
We could do CoinDesk. They're usually a good one.
These guys have the slider. So like, you go back to 2011. Come on, let's go back to. Let's do this. Here we go. Okay, so you go back to 2011, and look, there's your shitcoin pattern.
Yes.
That's Bitcoin.
That's right.
That's Bitcoin 2011,
That's right.
2012, and then it has another shitcoin pattern over here that dwarfs it, right? Oh wait,
Was there a wave in 2010?
See, here's your next shitcoin pattern.
Right. Well, no, at that point, roughly in 2013, it broke the shitcoin pattern, right?
Okay, so here's another. Isn't this another shitcoin?
No, this is the successive waves. So if you go down to the bottom of the article where I plot NAV, it says this is the pattern you're after. Once you've broken the first shitcoin pattern, you're in successive waves of climb. And,
okay.
And so that's what you want to look for. You want to look for a coin that has done its first wave. Till then, it's still a shitcoin.
Okay. So,
right, right at the bottom.
Are the coin? Oh, there's
no. That's Ethereum. See, that is something that's broken through. There. So, like, I'd say don't invest in the first wave. Wait
and see who breaks out.
Yeah, and Ethereum was actually the first to actually do a successive, like a new all-time high. And then a number of other coins followed. And then you knew, well, that was a signal for me to say altcoins have some sort of legitimacy. Till then, they were heading for zero.
Okay, so most of the coins that you're analyzing are a year or two old. I mean, yeah, Ethereum's only 2 years old, year and a half, 2 years old. And, so I guess Litecoin is a little older.
Yeah.
But most of them are quite new. Maybe we don't know which ones are going to break out.
Yeah, it's true. It's very young. It's very young in it.
But your opinion is that they won't break out based on a feature.
Yeah.
They have to have something totally compelling that Bitcoin doesn't have or deliver.
Yeah, it's not just compelling. You've got to have a way to gain the network effects.
And what about things like storage coin or what is it, Factum or name coin? These things that have kind of a specific purpose, like replacing the DNS system or a system for land title, or I mean, should they all just be using the Bitcoin blockchain?
Storage is interesting.
Yeah.
I mean, they are using Bitcoin in that, aren't they? They're using Bitcoin-based smart contracts, and they've used their own token for payments. And I wonder why they did that.
Is it going to be some?
Makes sense.
Is it going to be some? Because I can kind of picture a world where people create their own token, like American Airlines frequent flyer miles. But maybe they need the security of the Bitcoin blockchain periodically, right? They could have their own coin and then reconcile, every 24 hours with the Bitcoin blockchain. That way they get the security of the Bitcoin blockchain, but they've got their own smaller coin that can fill some purpose or some niche application. Or
that's sidechain. Is that?
I don't know. I mean, would you consider counterparty tokens as a sidechain? Isn't that what they do? Don't they link counterparty assets to the Bitcoin blockchain somehow so that they can trade them, use them, manipulate them without every update having to be a Bitcoin transaction because it's too expensive? But yet you still want that. You still want the security of the Bitcoin blockchain, but you want to do something that Bitcoin can't do.
Yeah, I see what you're saying. Yep.
And are those secondary coins, do they also have value? If you had a American Airlines frequent flyer mile, I mean, that's valuable in a certain context. If someone like American Airlines wanted to legitimize their token and say, we can guarantee the supply of American Airlines tokens because we're reconciling with the Bitcoin blockchain every 24 hours or something. And maybe they create a secondary market for their airline miles, and they do all kinds of things that they want their air mile token to do, but they only use the Bitcoin blockchain as as the way to check up on themselves or give themselves legitimacy. I mean, all of these other coins have to survive somehow, right? These 700 altcoins, they've got to do something that Bitcoin can't do if they're going to survive.
Yeah, well, that sort of American Airlines, it's really just an alternative currency, right? That's quite different from a platform that's based on a particular feature set. It's a little bit like jumping onto Counterparty and creating a Pepe coin, Rare Cafe or something.
Yeah.
Or, you know what, the Dread coin. I think Peter made a Dread coin at one point. I think that's you know, you could probably break that out into a whole separate area. And
but as far as investment purposes, I mean, it really doesn't play, right? I mean, these are people are trying to achieve some sort of functional end, and the value end of it, or the investment opportunity, the speculative aspects of it, I mean, are not really.
Yeah, I guess you have to break those sort of alternative currencies out and treat them. I would imagine you'd treat them differently. You'd treat them on the merits of that economy.
Yeah. And the robustness of that economy and and what it's getting done there.
Yeah.
Because there has to be a demand for the thing itself, right?
Yeah, I wouldn't. So I don't know if I'd call it a platform. I'd just call it a currency, straight out currency.
So where's your head now? You've looked at all these coins. Is there another, like you started? Come on.
I'm like,
you started here.
Yeah.
Right, and then you identified this shitcoin pattern. And then this Commerce Index article was about payment coins, right? So it was another kind of feature looking at it.
This is really about what we were talking about earlier. The network effects of Bitcoin, or any kind of payment system. You're talking about privacy and fungibility in terms of a payment coin.
Right, speed of transaction processing, transaction throughput.
All that sort of stuff. That pales in comparison to liquidity and volatility, because people won't touch it if your coin's going to be jumping around like a crazy little thing. And so, and that's, the merchants won't take it, and the users won't fund their wallets with it. And so both sides of that need stability and liquidity. So I thought I'd combine the two, and I wanted to plot that and see what it looked like for major coins. And so this was the Bitcoin one. And then there's another article where I compare.
This one?
No, it's if you go to the homepage, I think there's a. It carries on with it. If you scroll down a bit, there you go.
This one?
Payment coins. Yep, it's right there already. So that's the major payment coins on that Commerce Index. So it's liquidity and stability. And
is this again a logarithmic scale here?
Yeah, all of the stuff is logarithmic. Otherwise, Bitcoin's through the roof.
Right.
It's just ridiculously through the roof. And so the interesting thing here is Ethereum turns out to be a better payment coins than the payment coins. And the reason for that is it's broken the chicken and egg problem. Like a payment coin, well, you need stability and you need liquidity before you start on it. And there's no other feature to push that forward. But with Ethereum, people are buying into it because, well, they've created demand for it because of the gas to run on their EVM. So they've broken that sort of chicken egg problem, and it is climbing. So I would say if you're going to do a payment coin, don't make it a payment coin.
It's got to appeal on some other level like Ethereum does.
Yeah, exactly.
And because a payment coin depends on the liquidity and network effects of the coin itself.
That's right. And you're not going to get it until you get it.
Right.
Chicken
and the egg.
Chicken and the egg.
Okay.
So, yeah, but I just wanted to look at the data underneath this, because I had the idea of this index, and I thought I had some good ideas about this, and as it turned out, my ideas were stupid.
Oh, really?
They're all stupid. They don't work. And I've actually turned into a Bitcoin maximalist. But I was so bullish on alts, I was like, yeah, this is like, if you look at those early posts, I was saying alts are where the opportunity are, and then all the data said that was stupid. And so
you were willing to change your mind based on the data? You didn't hold some sort of religious conviction, some dogmatic stance?
So, what did Andreas Antonopoulos say about Bitcoin maximalists, saying they were dummies? Or did you hear that?
But he is a Bitcoin maximalist, isn't he? Andreas is, isn't he?
No, he says he's not a maximalist because that being a maximalist saying there will be nothing new coming in and you're not open to new ideas or something like that. It was he says it's arrogant to be a maximalist.
Ah, okay.
Or something like that.
Well, that's funny because I wasn't aware that he held that position, and just listening to him talk, I put him in the Bitcoin maximalist category. Yeah, he always seems to me to be like promoting Bitcoin over other.
He's pretty good with Ethereum. He likes Ethereum.
Yeah.
I don't anymore.
Fascinating.
But yeah, so.
So that's quite interesting, though, that the data, in the face of looking at the data, you changed your tune a little bit.
Yeah. I'm struggling to find a formula that works right now.
I mean, I was really excited about my little philosophy that I could identify something that Bitcoin didn't do well, and just, if there's 3 or 4 coins that are tackling fungibility or anonymity, for example, you just buy a little bit of those, and one of them will explode. And that actually happened with me and Monero. I bought a little Monero, and then we had that initial spike, and I was like, oh, how smart am I? I did this little, I bought a little thing and held the other coins didn't do as well as that one did, but it kind of went through the roof. But it has since come down. And
yeah, it's that shitcoin.
Right, it's following the shitcoin pattern.
It's
and so maybe that wasn't the smartest idea, or maybe it was if I could have picked the top and sold then. But that's
trading. It's I mean, all of these things are short term. So like, this advice is for long term hold investments, and over the long term, there has been very, very few coins that have continued to outpace Bitcoin. I'd say none really. The ones that do, they're still in their early first couple of years. So yeah,
time will tell. Well, but in the meantime, and I care because we're trying to build a little Bitcoin empire here in Ubud. We're trying to get merchants to accept cryptocurrency. Right? Who am I to say if it should be Bitcoin or not? We've it's been hard enough to get people to wrap their head around Bitcoin, much less talking to them about Ethereum or Dash or some. At this point, I don't think the lay person is ready to jump into the entire crypto swimming pool, alphabet soup of coins, but I do want to see something succeed. If it's going to be Bitcoin, I'll stay on that horse. But if it's going to be Ethereum, or if it's going to be Dash or something else, well, I'd like to know sooner rather than later.
Yeah, I mean, I could say, as an uninformed non-expert, I would give it a 99.999999% chance that there will not be a payment coin that beats Bitcoin.
Yeah,
unless it's decreed by legal tender by a government.
Right. Or if Bitcoin has some sort of catastrophic technical failure that makes it unravel or requires a hard fork.
If it fails, if Bitcoin fails, then you might have a successor. But we've got too much of a first mover advantage in Bitcoin. Did you see that this last week we're hitting on 0.5% of the traded volume of US dollar to euro volume traded?
Volume, like transaction volume, or value traded?
No, value traded.
Value traded.
Like something like $6 billion of 24-hour traded volume. And I ran that up against the Forex markets, and US to euro is like the biggest market in the entire planet. And we hit 0.5% recently. So go and compare that to, say, Monero. We're talking thousands of times smaller.
Right. Yeah.
So the effects are, the head start's huge.
Right.
Absolutely huge, and it's only going to get bigger in this next year. Like the hedge funds are going to come in next year. I mean, one of the things I've been seeing is, Barry Silbert.
Yeah, right? He's going to be in Singapore next month, or later this month. I think on the 17th of November.
Are you going?
I was thinking about it.
Might be worth a hop, eh? We
yeah.
should get a crew together.
Yes, we'll storm the gates.
I mean,
although it sounds like you agree with them, I'd rather disagree with them than maybe
I don't know. What I saw was, he runs the GBTC ETF, right? It's not an open ETF. It's for vetted investors. So right. He's got the inside line on ETFs. He has a prediction. He has a number of predictions of 2017. He says we'll see the first ETF come out. And if he's saying that and he's running an ETF, I'm saying that's a pretty sure bet that we're going to see the Winklevoss ETF come out. And when that comes out, we've got billions coming into
institutional
Bitcoin.
Investors that are able to take a slice of Bitcoin action.
Yeah, so we're going to see liquidity go through the roof, and probably the price go through the roof as well.
Well, you know what's interesting about that ETF that Barry Silbert runs? It runs at like a 60% premium to the price of Bitcoin or something crazy.
Yeah,
like that.
I was listening to that, and there's a reason for it. There's a reason for it. It's not just because of demand. It's to do with I can't recall it. It's not one-to-one parity because buying and selling into it. It's not completely. It's not one-to-one. At some point, I think people sell out and it pushes. I don't know.
But it is fascinating that it does do that though.
Yeah.
And for me, at least my interpretation was that is the friction that normal investors feel for holding Bitcoin themselves. They'd rather deal with the incumbent, infrastructure and systems that they're used to. They'd rather just buy a share from someone who's jumped through all the regulatory hoops. Yeah. They can get in the game and they don't mind the premium. It's amazing that they don't mind the premium.
That was actually what I thought it was, but it turns out it's not. It's something to do with the dynamics of the buy-ins and the people that sell out. And I think that it's a fair point. I mean, most people that are in the normal financial world don't want to deal with the
technical complexity and
the complexity
and
the
risk.
The risk. I mean, I'm talking to my partner's father about it, and he doesn't want to. He wants to invest, but he doesn't understand it.
Right. With great power comes great responsibility. Too much, maybe. Right.
How do you get someone, the retired investment folk in their 70s that have funds to invest, to figure out private keys?
Yeah. Well, key management, that's an area of innovation that's really fascinating. Yeah. Identity, we've been talking a lot about identity on our Tuesday nights the past few weeks. And identity is really just, a certain aspect of identity is just key management. And key management is tricky. It's non-trivial, and probably why someone would want to buy an ETF as opposed to hanging on to their own keys.
Yes, exactly.
But is this the beginning of making Bitcoin just like every other thing that's traded on the world financial markets? And is there going to be paper Bitcoin and fractional reserve lending on Bitcoin? And is it just?
What do you think?
Well, I mean, I'm not interested in buying an ETF. I'm kind of a purist, possibly. I don't feel like I need to have that, that babysitter.
It's kind of like having your money in exchange, isn't it? It's exactly the same. Someone's holding your funds for you.
True.
So you don't know whether it's fully one-to-one.
That's true.
But with Bitcoin, it's interesting because you can do proof of ownership, right? Like
or proof of reserve. They could prove their reserves.
They can prove their reserves. And like Bitfinex did the multi-sig and said, here you can watch it, I've decided multi-sig isn't actually so much as a security protocol, but maybe a good backup for your keys. But
interesting.
But like if you look at the price of Bitcoin price of Bitcoin has been recovering from a 2-year downtrend because of the Mt. Gox shock and pump. And so we suffer a lot of in price because of exchange hacks. And if by 2017 the Vault technology comes out, have you heard of that?
Vault?
Yeah.
No? Is that like a brand? Vault?
It's a protocol. It came out, was it over a year ago, I think, but it didn't get much attention, but they're talking about it now, scaling Bitcoin. And I think it might require, it requires segregated witness, one of the script opcodes that are coming out. And it allows us to put funds into the vault and put it on a timer. And if people steal the keys for the vault, you can reverse it.
Ah, yes, I did hear about this. It's like it's got a whole scheme to it, right?
Yes,
like
exactly.
if you realize that every transaction has a waiting period or something, and if you realize that you've been breached, you can somehow the original hacker, you have something that the original hacker doesn't, you can roll back the transaction. Yeah,
it's kind of like you have multiple keys. You have one key you shouldn't ever use unless you've been hacked. You can put that in a safe, right? And that is the key that can reverse the funds to the vault. And then you have another key that's a hot key, and that's if a hacker steals that hot key, they can remove your funds, but you can get the cold storage key and call it back. And if you lose the cold storage key, I believe you can burn the funds.
Ah, yeah.
Yes.
Yeah, with the original key, you can actually make the funds not available, not good for anybody. Yes,
So in theory, it should, if it's implemented by the exchanges, it should stop all hacks to the exchanges, which is something we never thought was possible. So I think that's going to have a huge effect. I mean, the SEC, I think, is, their concerns are these types of security risks for an ETF.
Well, I come from a payments background. I worked with the card schemes and PCI compliance and fraud, and the amount of money that the whole industry loses is in the billions of dollars with card payment schemes. And that money is lost. I mean, that money just disappears. It goes away, and it's the cost of doing business. It's one of the reasons why credit cards are so expensive.
Yeah.
And it's fascinating. I really believe that with the introduction of Bitcoin, we've just seen a level of innovation that we just wouldn't have otherwise seen. And if something like what we're describing, this vault scheme or this vault protocol, can really work, and it's done on the protocol level, it sounds like the costs would be minimal. It's not like you have to have this whole card scheme edifice, MasterCard, Visa, Discover, American Express. Imagine the resources it takes to run those companies. If you could do that with a protocol,
it's very elegant.
It's pretty amazing. I mean, it's amazing. I mean, you can offer financial services to people that you couldn't otherwise afford to offer them to, which is the original promise of Bitcoin was along those lines. And it's fascinating to see how inventive, how innovative the community is. And people see Mt. Gox fail, and I get phone calls, hey, I heard Bitcoin is broken, Bitcoin got hacked, it's really bad for PR. But what it is good for, when those things happen, it is like an evolutionary step. You find out why that happened, and the ecosystem heals itself. And when it heals itself, it's much more healthy after the fact.
Yeah, that sort of anti-fragile nature of it is incredibly good. The bug bounties. We paid what was it, $500 million bug bounty for
the Willy bot.
Yeah.
Did you write that? Did you write that?
Someone's asked me that. Yeah. I didn't even know about Bitcoin back then.
Good answer. Well, there's one more of your articles that I wanted to talk about, because selfishly I think it applies to what we're trying to do here in Bali, and that is this volatility article.
Yeah.
Is this the volatility?
Yeah, that's one.
These are some cool graphs. And the reason that this is really interesting is because, you know, volatility, maybe someone might yawn if I say that we're going to talk about volatility, but the implications are really exciting because if we can get the volatility and the liquidity to a certain level, then the coin starts to look more like money to the everyday person.
Yes.
And when that happens, magical things happen, like you can get every merchant in Bali to accept Bitcoin payments because the volatility doesn't scare them away.
It's incredible. Like the common argument against Bitcoin is it's a hoarding currency because it's going up. People are speculating. You don't want to spend it. But if you get the volatility down, say it's down to a fiat level where it's just a ripple.
It's really boring.
What you end up with is a high interest bearing account. Like it doesn't change other than it moves up each week.
Right. Maybe it's slowly, but yeah.
Well, not slowly, right? It's we're talking like double digit to triple digit gains per annum, but without the crazy downward swings. So at that point, you've got a choice of putting your spending money in your cash account or your Bitcoin account. One generates multi-digit percentage interest, and you can spend from it, or the other one is 0%. You know. Or negative these days.
Well, and if we start to have currency crises in the world, you know, between now, where is it your next one that has predicts this date? There it is.
There it is.
Here's some of the volatility predictions, and you're thinking that Bitcoin might get in the range of the New Zealand dollar USD volatility.
And actually the USD euro is not much different. Like it is getting more volatile, and that was Tour de Mista tweeted back saying maybe sooner because fiat is getting more volatile.
It is. Well, and certainly in certain pockets around the world. If you're in Venezuela right now, you might really think Bitcoin is a little more stable than your own currency.
Yeah, probably. Yeah, true.
And I think it is these crises that make people take a look at Bitcoin.
Yeah.
Especially after it's been in the mainstream consciousness for a few years now. I'd say since the Cyprus thing happened, where they had the bail-ins there, that was when people kind of took a look at Bitcoin because it was a potential solution to things like that. And if we are to see other crises similar to that, it could hasten the adoption, the people seeing Bitcoin as non-volatile. Even if it is still, even if the trending volatility is not quite to that 5.5% basis on a sustained level, it's
just look. I mean, I'm looking at this and I'm saying you could draw the conclusion from the data that Bitcoin will be within a few years the most stable currency on the planet. Like you look at that graph, it's for a market cap of $11 billion today, compared to these market caps of it's like $15 trillion for USD euro, or even 30 trillion, depending on if even M2 money for euro is up around 50 trillion, right?
Mm-hmm.
Well, like you plot that on a graph, I mean a visualization, see how big those pools of money is compared to Bitcoin, how tiny it is, and yet how stable Bitcoin is. It's just phenomenal, and Bitcoin's exploding in size right now. So, it's going to be some pretty interesting times.
Well, the world is currently shopping for the next world reserve currency. I think it's pretty obvious that many people around the world would like to see some alternative to the dollar. If Bitcoin follows this trajectory, and it can handle its own popularity, because don't forget, like we're maxed out right now, and we're trying to solve our own throughput problems. Which, by the way, you called that like a couple years in advance when we were sitting down in 2014.
I did a trend back
then.
Yeah.
You did a little segment on the filter that said, hey guys, we're going to hit this 7 transactions per second. I mean, that predated even Mike Hearn's warning and all those guys.
I think Mike Hearn's warning was around 2010. I think it came up in the talk. So maybe we should increase the block size here. And Satoshi said, nah, don't worry about it, not yet. It was like famous last words.
Well, anyway, I don't know if I've got my Bitcoin beer goggles on or not, but I really like this story that you've woven here, especially because, you know, between now and July 2019, we're going to be trying to get merchants here to accept it. And I mean, we're talking about it with people. We're doing Bitcoin classes. You know, they need a little bit of vision to see Bitcoin working as money today. Yeah. But if it follows this trend, it gets easier and easier to see for more and more regular people.
Yeah, I mean, I think it's still a hard sell until we hit mid 2019. Just it's still too volatile for most. Not for me, but for most.
Right, and even the people that I talk to around town, they make the choice for a philosophical reason. Yeah. Not really because it makes all that much business sense and
or speculative reasons.
Right.
Yeah. And I think it'll be interesting because, like, what I see here is we're going to see hedge funds come in 2017. We're going to get another wave of price explosion. Just my guess. I'm picking 2,600.
20.
Do not invest on my recommendation.
This is not investment advice.
I'm picking 2,600 this year.
$2,600 per
Yeah,
Bitcoin.
I think we're in the middle of a 5x wave just at the start of it, from 500 to 2,500.
Well, you know what's exciting about that is everybody that we've been talking to about Bitcoin for the last 2 years here would see that kind of bonanza, and it would be really exciting to see their interest pay off.
They'll be patient.
That would be cool. That would be very cool.
You know, that kind of there's reasons for this fueling of it, but then if we start to see merchants adopt it, coming in maybe in the 2018, 2019 phase, you're going to see I would think a bearish, you know, like a cap, like, you know, it's if these merchants that we were talking about before sell for fiat, then it's a bearish effect, so it'll stabilize. Actually, I think it'll be very stable.
Right. Well, that's where that's a perfect storm, right? Because if we can get the volatility to something less than, you know, the Indonesian rupiah here, and then they're motivated to keep it, right?
Yeah, it's just it's like if you can get the volatility below fiat, I'm thinking, I could be wrong, could be you got to go way lower, but once you get merchants on board, what happens there is you've got a whole pile of buy sell orders and exchanges, and so if you really dig into what makes volatility low, it's the number of people in the market buying and selling. It's the velocity of money. And so as you get merchants coming on, all that does is it makes it even more stable. It's like it'll stick this ping pong ball that's whizzing everywhere with turbulence, and it'll just add weight to it. And it'll be pretty interesting. It'll be exciting.
Yeah, definitely. Yeah. Well, I think we're just about out of time. This has been fun, man. This is good stuff. We covered a lot of ground on this little conversation.
Twice.
Oh yeah, it's too bad you guys didn't get the benefit of our first conversation that didn't record anything at all. Apologize for that. Thanks for sticking around and hanging in there. Try and get my AV skills honed for next time.
This is going out to our 2 viewers out there.
Yes. Hello out there. Hi, Mom.
They're probably downstairs.
Anyway, it's been fun. We got to do it again. Who knows? Maybe we'll have 4 or 5 viewers next time. And yeah. Anyway, this is going to go right up on YouTube on our YouTube channel, The Filtered Live. And please subscribe to that. You can catch when we do this the next time around. And you can find us on Facebook in the Bitcoins in Bali group, on Twitter #Bitcoins in Bali, and you can find Willy and his work at WooBull.com. Is that where?
That is correct.
And on Twitter you are
DangerMouse117.
All right. Well, until next time, thanks for doing this, man. This is fun. We're gonna have to do this again. And maybe you can hop on our Tuesday night thing we got going on around here too. What do you say?
Oh yeah, I'm definitely in on this.
Okay, awesome. All right, well, until next time, folks, that's all from Bali. We'll see you next time. Thanks for tuning in.
See you guys.